Okay, so yes, the AR high-low, we call it the ARCA high-low indicator. So what it is basically it's a trend strength indicator. I'm going to share with you just some real quick notes. This is just a few here. And it's based off stocks making new highs. Why? Because, it caught my interest years ago. How do I look at internal indicators? There's a lot of places you can find internal indicators. In fact, I got one of these sites up here. It's been around for ages. We call it market breadth. That's an internal indicator where our market's overextended, underextended. You got things like put call ratio, 80 line advanced decliners. This one caught my interest right here. New York Stock Exchange high and lows. And what that is how many stocks are making new highs, and how many stocks are making new lows, meaning new prices on their charts. Now, why is that important? Why is that an indicator? Because when a stock makes a new high, it simply means it reached a record price. So it's at a high point on the chart compared to the past. Now, you know me, I got to think deeply on this. What do you mean past? How far? Well, usually it's based on a year. So, this familiar indicator, the 52-week high-low, they assume that, like it's a new high, new low for the year. Now, that's great because that means the stock's breaking out. So what it means also is a new high is almost always a bullish trend. So if a stock's hitting a new high, it's almost always bullish. Since the definition of a bullish trend is when a stock hits higher peaks, and if it dips down, it makes higher lows. So in order to be in a bullish trend, it has to make a higher price, as it's going forward. If it doesn't make a higher price, then it's considered, it could be going down and just channeling. But we can almost assume that a high is a bullish trend and vice versa, a new low. But again, that's on a 52-week chart. And a lot can happen. In 52 weeks, stocks can make many highs and many different trends. A lot of different trends can happen. And, things can change in a year without making a higher low. So there's a lot of stocks that are not doing 52-week highs and lows. So I don't like this 52-week thing. So what I found is I found indicators that actually you can find on Thinkorswim and many other softwares. What about 1 month high and lows? What about more than just the New York Stock Exchange? So just give an example about that is let me pull up a stock that's very familiar here. Let me try FedEx. Like FedEx is a good example here. FedEx. Now, if you look at FedEx in the last few months, this is bullish. It's hitting new highs but it's not a 52-week high. If I go out in the time frame here, and I go 2 years, you can see that it's not a 52-week high, but it is bullish. So this has a long way to go to even be counted as a 52-week high. But I do want to know, is it a bullish or bearish? What's another one? Give an example. Lilly, same thing. It's been bullish ever since back here in October. It's over a month. But it's not at the 52-week high yet. So it's not going to signal very often unless it's making 50. So really only the growth companies or companies that are really hitting new highs are really worth it on a 52-week. I want to know, basically, things can trend within a month or two. So what I like to look at is break it down. How many stocks are like, I don't know, Microsoft? That's their 52-week high, but it's also been bullish for the last month and a half. I just want to know in the last month or two or even three, how many stocks are bullish just looking at a month back. I don't need them to break a 52-week high because that's way too much of a range. So you can do this indicator here, and I put this indicator together, and I'll show you what it is in a second. But here's a 1 month high. This is looking at Archipelago. Now, Archipelago here is really a great, we talked about that, the ARCA. It's really a great way to look at more than just the New York Stock Exchange. It's over 8,000 stocks. And you can see here, the indicator up here says New York Stock Exchange Archipelago new highs 1 month. That's looking at over 8,000 stocks. We have 245 new highs just looking at a month of data. So that's how many highs. I'm going to put that number here, 245. I'm going to do this quickly before it changes. That's stocks that are definitely bullish trending. We don't have to go back 52 weeks. 1 month is enough. So if it's breaking highs in the last 30 days, it's definitely a bullish trend. Now, if I look at the new lows for 1 month, that's the ARCA low, we have 66 over here. So 66 are definitely downtrending. Now, why do I pick this versus advanced decliners? Well, because I'm looking for strong trends. When there's a big difference between strong trends, there is more of a strength in the market. Like I want to see bullish trends that are strong bullish trends, not just slowly bleeding up or melting up, however you want to call it. Now, if you subtract these two, we have what's called the net. And that's what I like to look at. You can see here the bullish trends are definitely beating the bearish trends. But instead of looking at two indicators, here's the hack, here's the Gino gem, here's the ARHI3M highs minus the lows, and it does the math for you. Now, it might have changed a little bit in the last 30 seconds, but here it is. The net, you can see, favors the bulls. And you can see right here, the net was favoring the bears, the net was favoring the bulls. This means this, from this point right here, October 15th, you can totally tell, definitely more breakouts, more new highs, and stronger uptrends. There's also one I like to look at, the AR3 month, because these are stronger, longer term trends. I look at both. We have 199, we'll just call it 200 new highs. You subtract the lows of 34, you can definitely tell the new highs are winning. So I'll put that on there. And just to show you back tested real quick, you can see right here, and I'm going to point this out with a date, October 15th, the new high started winning. Now, actually, it was the 14th right here. I usually wait for a second day, but you can see 14th, 15th, the new high trends were winning. Back here, right about the 17th, and it looked like the 20th, it started the bears were winning. Over here, more decliners were winning. And I'm just going to mark some important key points here. And this is why I really look at it, is not only to know who's winning, but the warning sign for the bear. You can see back here, February 24th, 2020, right before the pandemic sell-off. That was my bear warning. Right here, the bulls are winning. Again, a big warning here. And I just did a few of them here, but watch when I put the S&P here and I carry those over. SPY, you can totally see the same dates here. So you can see here was the high-low bearish. The bear trends were winning. Right before, now would be a great time to up, and I put a little rectangle box. That was your warning to go bearish. And then on the 3-month indicator, it said don't start to go bullish until here. This is where the bullish trend started strengthening. Now, the 1 month was started way back here, and you can see the bullish trend, and then the bear trend came in again right here. So just because that indicator, you got the meat of that move. Again, right here, the bear indicator told us to back off. And then right here, the bullish indicator said jump back in. So what I like about this is it's a market internal. It's not the only one. It's just one I look at, and we put it on the newsletter all the time. Is when it says bullish here, did you pick a bottom? No. It's letting you know that more bullish trends are breaking out. So with that said, the market will not make new highs. Again, the market's not going to make new highs unless there's a lot of stocks making new highs. So what market do you want to play? I want to play a market that's going to make new highs. And if it's not making new highs, that means my money's stagnant. I want to resort to cash flow trades. I want to know if the market's making new lows and stocks are making new lows, because I might want to move my IRA or 401k to cash. But right here that said the market's making new highs. I didn't see the breakout here, but now you can see the market's going to start going up because there's more new highs. Again, how can the market make new highs if stocks are not? That's what this indicator is good at. And finally, it's also good at warning you, like right here, if the market's not making new highs, it could make new lows. So be careful on the bear side. So this is a strength indicator, how bullish. So once again, let's look at the AR high low indicator. It's right there. $ ARHI3M minus $ AR low. If you kind of get the gist of this and you kind of want to add it to your repertoire or whatever it is, guys, it's on the newsletter every week. I break it down for you, whether it's a bullish trend. We have increasing today. We have definitely more highs, even more than Friday. No matter if the market's up or down today, this is a bullish trend. And there you go. That's the AR high-low indicator. Check it out on the newsletter every week. And this, once again, is Gino Gems.